Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Tuesday, the 9th of April, 2024. So tomorrow, we're going to get all-important CPI numbers. We're going to get the Fed minutes. We have a number of things, so let's take a look at what you're going to get. You get the Mortgage Bankers Association numbers. They come out bright and early at 6 a.m. Central Time. Then we get the Consumer Price Index. So it's forecast up 0.3 month over month, and that compares to the previous month's 0.4 up. On a monthly terms, expected up 0.3 in March compared to the prior month's up 0.4. I don't know why they put it in twice that way. It seems sort of straight. That's analysts and how it's, I guess, comparing. And CPI in an annualist term is forecast up 3.4% from the year-ago month, and the core year-over-year figure is expected up 3.7%. So I take this from the services that I get, and I get a lot of them. But it's interesting why they put that up both ways, because it turns out to be the same. The minutes come out at 1 o'clock. Everybody's going to want to look at the minutes and read through what was said. And, you know, what you're going to get is traders trying to say, oh, June's back in play. Well, it will be if we see that these numbers come in less than 0.3% up. And if this number is closer to 3% than it is 3.4, traders will say, uh-oh, things are weakening. The Fed's got to get ahead of the game. On the other hand, numbers over 3% here and over 3.4 gives the other side the reckoning, and they'll go, we still are sticky. We've got inflation. How could you even be thinking that June is the time frame? You need to get new data that shows you're weakening. That's what the market's going to focus on. So we will see just where it goes. The interesting thing was how the markets went today. 90% of the day was spent steady, and then a break that happened mid-morning, and it kept carrying, and you were taking the indices down. Late in the day, I'm talking the last hour and a half of trading, the market found its footing, and then right into the close, rallies galore. The Dow was down 0.6, but as you can see, well into the top part of the day's range. Same in the S&P, a positive gain, XLRE, and nice return. And take a look at how much that was up here in the QQQ. Does it mean anything? That's the bigger question. Obviously, if you had outside days up, which you had in a number of them, taking out today's lows will be one ugly-looking picture in the short term. I think that regardless of what happens, traders are waiting with a lot of money on the side. I heard estimates over $6 trillion waiting to be deployed in the stock market if it would give them a reasonable break. Reasonable, probably anywhere from 4% to 10%, something in that general range. Okay. NVIDIA, well off its highs, down another $17, and the market is now in a bear market correction. I mean, if you look at the high, where it's come down, you've gone down more than 10% in it. TLT up, Amazon, another nice move for the upsides. There's so much talk about 200 in that market. Tesla actually put on a little bit of a gain today. So that was fairly interesting, too. Now, one of the markets that I've been covering for you is the IEO, and that's the U.S. oil and gas exploration. And as you can see, we're in a distribution. This market has roared. It was just at the beginning of the year in January, just over $86. And the market has added to it 20% in value plus. So a heck of a nice rally in this market. Is that closer to 30% probably? And you can see what it's done there. It's giving you a small pullback, but the pattern is still higher lows, higher highs bullish. Same thing here. When you look at it, you're over all the key averages, the 18, 100 to 200. The resistance is the Bollinger Band. And you went up to it and you've backed off a little, but if you don't lose the bullish embedded reading, and you haven't done it yet, it means that breaks like this, well, if you get an extension and you don't lose that reading, the pros are going to come in until it's lost. They'll bail if the red line, in my opinion, closes under 79. And then they'll look for it back up at the 113.30 level. In DraftKings, I told you I wasn't friendly this market yesterday, and I think I'm on to something. Lower highs, lower lows, under the 18-day average. You've opened the door to go back to 41.78. I think you peaked out up here. And remember, I was saying that. I said it won't wait for March Madness to be over. There's no more big betting things right now going on, other normal ball games, things like that. You know, the end of the basketball, NBA season will come soon. But that's not the type of betting you get on these college games. So now we'll see what they actually earned and what they did with that. In UGA, the gasoline fund, okay, market could back off a little bit more here. I can make an argument for it to still get back to the 18-day average, 71.28. In XLF, well, you had another outside day to the downside today. So you had one before, right here, that I'm pointing to, and another one. If you take out today's high on either Wednesday or Thursday, it could be a bear trap, and then you make your run to the upper band. But if you don't, and you stay like this, you're opening the door for the potential of 40.69 on the downside. In XLI, the industrial sector, you've pulled back to a neutral zone, the 18-day average. So the market started with that pattern of lower highs, lower lows, but over the red line, the 18-day average. It went to the support. I call that the line in the sand. Held it and came up. Obviously, a lot of these markets are all waiting on the CPI tomorrow. Then it'll say, oh, they're waiting for the Fed minutes. Then, you know, they'll wait for the European Central Bank on Thursday, and then the PPI report on Friday. But the big monster is now the CPI. FCX, right on up to the upper Bollinger Band, still embedded. So still, Freeport still acting very, very friendly right here. I started covering that 2 or 3 weeks ago for you, and it's still looking good. In RSPD, now the consumer, you acted terrible early on, and now you're starting to get a turn in the market to the upside. I could start making arguments here that it acts like it wants to go back to the 18-day average to fight a battle. In XHB, the home builders, well, you tried the decline today, and by day's end, it made back almost everything that it was losing and closed close to the 18-day average. The trend is down. You have to get over 109.31 to negate the downtrend. And obviously, what CPI comes in with tomorrow and how it affects interest rates, direct impact on the home builders for tomorrow at least. On the energies, still with an embedded reading, I still think that they're looking like they're a buy on pullbacks in the marketplace. In the gold, the silver, the miners, they're all running the upper Bollinger Band. I call this the Gorilla Glue trade because Gorilla Glue, that strong glue, it just latches onto the Bollinger Band. Until it lets go, it doesn't have to. It starts off by getting over it, then it pulls back under, and then it keeps going, and it's merciless when that happens. It's the Gorilla Glue part that I call of it, and you see it in the silver market, and as it's going on there, copper's trying to develop it. This is just a very bullish scenario in these markets because on breaks, because people are caught, they can't wait to come out in some type of strategy, and they want to get into the market, so it'll find buyers, in my opinion, under it. In TLT, lower highs, lower lows, but some short covering. You're oversold. You went into the Bollinger Bands, and why not? I think the pros are saying, okay, let's take a look at that CPI. What's it going to do to interest rates? What's it going to do to the Fed? Is it a go signal for them or no? Higher for longer again. That's what the market's worried about. As we take a look at the dollar index, you fell into the 18-day average. That's all I was looking for on this correction. I thought we'd get one that could pull back, find some support there, because the swing line was breaking down, and you had lost the bullish embedded reading. But all that you were owed in the market after you lose the bullish reading here is the 18-day average, and I'm satisfied now that it got there. And in the euro, just yesterday I pointed out that even though it was looking good, if it went up, the 100-day average and the 18, generally the first challenge of them, and I can only use the word generally, it's not every time, but generally speaking, that's enough to stop these markets on the first go, and it's certainly doing that at least temporarily. Now, the beauty is tomorrow morning at 7:30, what's going to happen is I'm going to be able to take a look at first the CPI, and then I'm going to come out with my recordings for my Spider ETF video. And it's in that video that I'm going to say buy here, sell there, do this. We have a lot of positions going into this report, all off a weekly chart basis at this point. So the big question is, will they be impacted? Will we want to add? Will we want to go into new trades? I was telling traders today, we got to look hard at it. I cover all these different type of markets. I want to play that again so you can actually see where it was. But I rotate 40 to 45 charts on each video. Now, I keep a stalwart of a certain type of them. And then I start adding, like you're seeing me, I'm now covering ISO, and I'll move some out, others in, wherever I'm thinking the action is or wherever you write me and you want them covered. So you'll see these core, but remember, there's over 40. There aren't 40 names here, so I'm always rotating new things in and out to make it interesting. Plus, my subscribers can write me. I answer their questions, and I generally do a small video for them with the answer. I find that better than just writing a long response to them. They seem to like that. So how do you get this? All right, all you need to do is go to our website under the word research. It's right there. Just read about it, sign up right there, and I'll catch you first thing in the morning tomorrow. So CPI day, which way? I don't know, but here's what I have a feeling. It's going to be full of action. IraEpstein.com under the word research, or click up here. It'll take you right to that area. I'm Ira. You take care.